Bitcoin is the first decentralized cryptocurrency and was invented by a group of people led by the mysterious Satoshi Nakamoto. It is a decentralized digital currency created in 2009 and uses cryptography to maintain its integrity. Bitcoin can also be used as a digital cash alternative. The network is peer-to-peer and allows users to send and receive money without the need for a third-party intermediary. Hey there guys, and welcome back to our channel, Smart Tech Ideas. In this video, we'll discuss why Bitcoin will get affected by the inflation. Before we begin, make sure to subscribe to our channel and hit the bell icon to know the changes in the crypto market first. Without any further ado, let's get into it. The most important issue that has been causing the price of Bitcoin to fall recently is the inflation rate caused by the increasing number of transactions in the network. As more and more people start to use Bitcoin, more people are mining it, which will cause the number of Bitcoins in circulation to increase and the price to drop. The inflation rate in 2022 is more than twice as compared to the rate recorded in 2021. The overall rise in inflation reflects the effects of the COVID-19 related lockdowns in 2020 and 2021. Many experts already predicted inflation to rise significantly in 2020 as governments worldwide were forced to inject trillions of dollars to help stimulate a stagnating economy caused by the coronavirus pandemic. However, inflation remained stable despite the pandemic-induced money printing. But now that economies are reopening and consumer spending is picking up, governments are facing a problem in controlling inflation. Inflation happens when the state or the central bank keeps printing the currency notes exorbitantly, resulting in an excess money supply. The economic theory lays down that inflation occurs when the money supply increases faster than the actual output of goods and services. This happens as households now have more cash to purchase the same amount of goods, resulting in increasing prices. The economics around Bitcoin are quite complex and challenging to understand. During its hype, there were rumors that cryptocurrencies, including Bitcoin, are designed to resist inflation, or may experience predictable or low inflation rates. But Bitcoin is suffering and not performing as a pure hedge against inflation right now. Bitcoin is often referred to as a digital gold by its backers. People have been investing in it just like gold. But due to being largely driven by institutional investments, the cryptocurrency has become increasingly aligned with general market movements. According to the economist VENUGOPAL, what's more likely is that the value of cryptocurrencies is tied to the business use cases, like Bitcoin for payments, network effects like more developers using Ethereum, and old-fashioned hype. As more institutional investors have bought in, crypto markets have become more correlated with traditional financial markets. This means that when the market goes down, Bitcoin likely goes down as well. This institutional interest fueled crypto prices very high, tethered them to traditional assets, and increased volatility. Crypto experts also pointed to 2019 as the year when large financial institutions started accumulating crypto reserves. And when investors sell, they don't just trade in one asset class. Retail investors and institutional investors might sell assets to cover losses in other ones. If crypto was once a hedge from inflation and traditional market forces, that era might be long gone. There was a time when you could think about Bitcoin as a way to diversify from the market. But that's no longer the case, said Merav Ozer, a blockchain expert and fintech professor at Rutgers Business School. Consequently, when news of inflation struck, the Federal Reserve enacted a dual mandate. Policy interest rates went up and there was monetary tightening. As a result, assets including crypto like Bitcoin saw a price decline. Co-founder of automated crypto trading platform CoinRule, OLEG GIBERSTEIN, thinks crypto is undergoing the same stresses as other parts of the economy, leading to the fall in prices. He said, "It's not just crypto that's down, everything is down, and over the next 6 to 12 months, the economic outlook is bad. Central banks are between a rock and a hard place with regard to slow economic growth and high inflation. So, investors are escaping risk on assets like crypto and tech stocks." ITAY Goldstein, a professor of finance and economics at the University of Pennsylvania's Wharton Business School, says, "People used to think that cryptocurrencies would not move with traditional financial market fluctuations. Recent trends are showing that they are strongly intertwined. As the value of Bitcoin is getting lower day by day, some people are considering it a good time to buy Bitcoin. Remember that the principle of buy the dip is based on the assumption that price drops are temporary aberrations that correct themselves over time. Dip buyers hope to exploit dips by buying at a relative discount and reaping the rewards when prices rise again. Crypto markets are volatile, so buying cryptocurrencies at any price is risky, let alone a dip that might become a long-term trend. While prices could return to previous levels, they could also fall even further, leaving your investment underwater. If the past is repeated, then the current dip or crash, depending on your point of view, could bounce back as it did last year, when prices fell to similar levels before returning to pre-dip levels and even peaking in the autumn. But of course, they might not, who knows? This brings our video to an end. What do you guys think about the future of Bitcoin? Is it a good time for investors to invest in Bitcoin at this point? Let us know in the comments section below. As always, we love to read your comments. Don't forget to subscribe to our channel Smart Tech Ideas and hit the bell icon for more intriguing content just like this. We'll catch you guys on the next one. Goodbye.